to this session on trade cycle. Let me begin with asking you a question. How many of you have sat on a roller coaster? Many of you? Okay, so you need some kind of really some mental preparedness, physical preparedness to sit on this, to ride on this. I think you should be more mentally strong first than any other physical strength. So there are two kinds of people who are mentally strong actually to ride through this roller coaster, and the other type is who really would not want to take this risk, right? So two types of, let's see, the first type in the business terms or in economic sense is called the entrepreneur. Can you see his journey? He's on a ride, on a roller coaster, carrying his family, friends, he'll carry his employees. Oh, so much responsibility. He needs new customers, right, to grow his business, because when he's not doing well, he needs money. Okay, and then when the roller coaster is going topsy turvy, he really is fed up, he wants to quit. But he says, no, I'm an entrepreneur. He has his mental strength, as you call it. He will continue, he has to move on. He will pass this topsy turvy part, and once he comes to a steady state, he's sailing through well, he's riding through well, and says, oh, this is fun. But the other kind of people who are not used to this kind of risk, don't they face any problem in life? Yes, they will face a problem. Because finally, if the entrepreneur is not doing well, his employees will not do well. They'll not get a good raise. Some of them will go jobless in the worst of times. And these things, right? This kind of this roller coaster effect is cascading. It also reaches every other individual. Even in our individual lives, you will see sometimes you're happy, you're calm, and sometimes you're depressed. These things, the journey of this roller coaster, we all are a part of in life. Now, in business or in the economy, when we talk about this entrepreneur or you or me or any company, all these companies at individual level, we all individuals are referred to as micro. An aggregate of all these micros is referred to as macro. And today we will be looking at this economics at a macro level. Macro level, let's look at this kind of a similar journey, how it happens in economics. But at a macro level, this concept is called the trade cycle. So let's look at a graph. Let's understand with the help of a graph where on y-axis you have real GDP, that is the total output produced by the economy, measured over a period of time. This time is usually measured in years. We can see this blue line here with a gentle slope. This is showing the expected growth. If everything was normal in the economy, no ups and downs, if it had to just move everything in the same pattern every time, then we would expect this kind of a growth, which is really not the fact in life, because we all don't want to just grow. We don't want to be mediocre. We don't want to grow this slow, right? So we want to really outdo this blue line. We want to move above the blue line, and therefore we work harder. We put in more efforts. We want to earn more money and break the records of some of our predecessors or some of our competitors, and maybe our own records of the past. What do? We want to move above the blue line. And this phase in the trade cycle is known as prosperity phase. This is a phase of growing economy. Everything is at its peak. What all happens in the prosperity phase? Prosperity phase is also known as the boom phase, when your consumer expenditure is very high, because of which there is high demand. And obviously, because there's more demand, people will start producing more. There'll be more output. If you have one factory, you may be wanting to put two more because there's so much demand, and you don't want to lose the opportunity. So if you have more and more production, more output, there'll be employment at a highest level in the economy, because of which, because of the higher sales volumes, your profit will be very high. Investment also at its highest level. Thus, because of all these factors, your prices will as a result be very high, because you don't mind paying higher if you have more money. If you can spend more, if you have more money, your prices will be high, which will result in inflation. And but the benefit will be your resources will be fully utilized, or sometimes even overutilized. You will overwork, and this is a prosperity or boom phase that you can see. What happens? This does not last forever. Nothing lasts forever, guys. You know that. So after this phase, after this peak, this saturation point, you don't know how much more to consume. There may be a factor when you don't want to consume more for whatsoever reasons we look at. There will be a phase where your consumption will drop, you will buy less. So, and all these activities will take a reverse turn, right? It's a U-turn, and this phase will be known as the recession phase. What happens during this phase is your consumer expenditure will start reducing. Your demand obviously will decline because you're not spending. And if there's no demand, your production and output will drop. The industry will sense the pulse of the market. And if there's lesser demand, or drop in demand, your unemployment increases because you won't need those many people if you're producing less. And profits will also start declining with the lower scale of production and lower sales volumes. And of course, investors will also adopt a wait and watch situation. They will reduce their investment plans. You yourself may not want to invest in your own company if you are not seeing great growth. So you will hold on, and the prices start declining because you first want to sell off what all you have already produced. So these industries, goods, services, everything will be sold at a lower price, and your utilization of resources will also drop. Your resources will be underutilized. So this is a recession phase. Mind it, of course, there is a decline here. GDP is declining, but there is no negative GDP, negative growth in GDP.
But negative growth in GDP.
Fairly above the blue line, you can see this recession phase, the GDP. So what happens beyond recession? That is something very worrisome. So once there is a declining trend, suddenly sometimes there may be an event or some trigger which will further dampen everything, and the economy may go to a new phase called depression. Nobody wants this, correct? And there may be a time when depression reaches its bottom, when it's known as a trough. That is your inverted triangle you can see. So what happens here? So this is between the peak and trough. You can see the red dotted line. The entire period is the period of contraction. And all your parameters, the indicators, are further in red. The red is deepening now. The consumer expenditure is at the lowest. Demand almost nil. Production will be at its lowest. Unemployment will be at its peak. And of course, your best of businesses will start having losses. And obviously, investment will be almost nil because you don't know the future. So you will not invest in these times. And how long this will last is not sure. So prices will also be at its bottommost because people want to sell off what all they have at whatever price. So rock bottom price scenario. And of course the resources will be idle because there's no work, there's no output, there's no activity. So what will your resources do? The manpower, material, money, all your resources, almost all of them will be idle. So tough situation, yes, but tough situations don't last forever, right? The tough people, tough institutions do, as we've all heard of. There will be soon some measures, say, adopted by the government, central or state government, some fiscal, economic measures like drop in interest rate, drop in taxation, various other incentives and schemes which will help your consumer demand, and you will come to a phase called the recovery phase. What will happen in this phase? You will, because of these incentives, improvement, whatever comes your way, you will start building confidence in the economy. You will start some expenditure, and the demand in the economy will start improving, because of which your output will be and your production capacity will be ramped up. You will bring in the manpower which you had laid off and do many more things to increase your production. Employment will increase, losses will reduce, and profit retrieval will happen from many of the companies who recover better than the others. And investment will also increase. You may want to ramp up, so you will invest otherwise, which you were not doing in the depression phase, in the hope of going to the next phase, that is inflation, the prosperity. Now, so prices are increasing and the resource utilization improves. This is the recovery phase. Thereafter, again, this business cycle takes its own turn. The next phase of next trade cycle starts. And one cycle comprises of, say, 4 phases. You've seen them: prosperity, recession, depression, and recovery. Once that is done, this cycle repeats itself. Right? So this is how it works. And what are the causes of this kind of a trade cycle? Mostly the causes are cyclical. What happens in cyclical? The cycle, you've seen how a cycle works. It's a series of events which is repeated when you say cyclical. The way cycle moves, the tire of a cycle moves up and down. And the other cause, whenever there is a depression, one of the causes, cyclical effect is not that dangerous because you know that it is moving up and down and things will improve. But the other one, which is the shock effect, is the worst one, which we would all be wary of. That is something like a world war or now a COVID-19 situation where the industry scenario, the sentiments are completely dampened. So finally, this trend line, the blue line is called the trend line for your information, which never happens usually in an economy. You never move so straight. So I would finally like to, now since I believe you would have understood what a trade cycle is, I would like to end this with a definition of trade cycle, that is as rhythmic fluctuations in aggregate economic activity that an economy experiences over a period of time. Okay, friends, thank you for a patient listening. Just showing you the next slide, which is a summary of our features. What we have seen, the features of each of these phases: prosperity, recession, depression, recovery, just for those students who may want to make notes. Hope this session has been useful. Thanking you guys for a patient listening. Until the next session, goodbye, good day.